Uber's just embarked on a new leg of its windy journey towards being a publicly listed company, Rob. It's issued a bond, a $2 billion bond. So my first thought of this is, why on earth would Uber want to issue debt at this stage in its growth?
So they've issued loans before, and I think they just looked at it and said, hey, you know, there's a lot of people wanting to loan money out at very incredibly cheap terms. Let's grab some. So they priced, it's two bonds actually, but $2 billion in total, at 7.5% and 8%. And if you think about it, a private company which is losing a ton of money, it doesn't even have positive EBITDA, and yet people are willing to lend it money at 8%. I'm sure they were like, okay, sure, why not?
And EBITDA is the bit of earnings that comes before you've paid your interest. So they don't even have enough earnings to pay interest.
Yeah, exactly.
People are buying bonds for what duration? Is this like?
It's 5 and 8 year bonds, yeah.
So why not just go ahead and issue equity, which is kind of simpler, right?
It's hard to say. I mean, we don't know. The company's being a bit closed mouth about it. I think it's just they don't want to sell too much of their equity. You know, they've been going out to investors again and again and again, raising cash, just because they're burning so much of it. In the last quarter, they burned almost 900. The loss is almost $900 million. So you know, they can't keep on doing that forever. And I think they just have different pools of investors looking to give money to them, and today's happened to be the high yield.
So there was a story a few days ago that the valuation of Uber, which again, let's just say is not making a profit, could be $120 billion. Yeah. Now this is something that it sounds like a banker has told Uber in an attempt to get
it is a banker
the IPO mandate. But is there any logic to that valuation for you?
There's no logic whatsoever. The most recent round valued them at $76 billion. Even that seems incredibly generous if you think about a company which has basically, they've never made a profit. There's no reason to think they will. The global taxi market isn't large enough to support a company probably at that valuation. They face mounting competition. There's no loyalty among drivers or even users to the app, so it's hard to see why anyone thinks they should be worth 76, let alone 120 billion.
So the other thing is, like a year ago, we were talking about Uber as a company with big reputational problems. People were talking about the way it treated its drivers, the way drivers treated customers. We've got a CEO who's been in place for a bit longer than that now, Dara Khosrowshahi. It seems like we've totally moved on from that. The Uber story is no longer about reputation issues, just about finance and capital markets.
I think, well, partly they've cleaned up their image a bit. You know, it seems like there was a story hitting every week with, you know, whether it's like, you know, abuse of colleagues or, you know, kind of various ethical things. He seems to have cleaned it up a bit. And the other thing is that they keep on growing at a phenomenal rate. I forgot the rate, but it's well over 40%. Annually. So it's just, if they can keep on doing that, there's just not that many companies that are growing that fast. And also investors have looked at other companies that are growing fast, and then they've figured out profits later on, like Facebook, for instance. The odds of Uber replicating that are pretty low to almost non-existent, I think. But investors seem comfortable, and they're like, hey, you know what? Maybe it'll be the next Facebook or something. Let's just get in because it's growing so quickly.
Long road ahead. Thanks, Rob. Join us here tomorrow for more breaking views.